Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 2nd of May, and we have Charu Chanana, market strategist from Saxo Markets, as our guest today. Charu, it's always great to have you on the show.
It's such a pleasure again, Brian. How hi?
Charu, for a start, let's take a look and see how markets numbers stack up in the first half of the day, and then I'm going to come back to you and get your insights. We're going to start with cryptocurrencies. Bitcoin is at 27,944. It's down 2.14%. Ethereum is at 1,825. It's down 1.17%. Now, looking across to regional equity markets, we start with the Straits Times Index, where you're at, Charu. It's up 0.37%. Bursa Malaysia is also up 0.37%. Shanghai is up 1.14%. The ASX ordinaries, all ordinaries bucks the trend. It's down 1.04%. The Nikkei is up 0.15%. The Hang Seng is up 0.13%. And rounding up the numbers, we've got the Kospi, which is up 0.6%. Charu, your views on market performance in the first half of the day?
I think, Brian, right now investors are just cautious because there's so much to watch in this week. We have the Fed meeting, we have the next leg of the earnings season as well. And then we're just coming out of this thin liquidity yesterday when many Asian markets were actually closed for the May 1st Labor Day. So I think it's just a game of, watching from the sidelines right now, really. Nothing to make of trends.
Okay, and so one thing we have to talk about this morning, the IMF came up with macro numbers which increased its growth projections for the Asia Pacific region to 4.6% in 2023 after growing 3.8% in 2022. Now, interestingly enough, it expects China and India to contribute half of global growth this year, with the rest of Asia Pacific contributing an additional fifth. So basically, 70% of global growth is going to come out of the Asia Pacific region. Charu, your thoughts on this and what should we be watching out for specifically?
I think, Brian, I've been on your show many times, and out of that, 50% of the times I've probably said that Asia offers some amount of calm this year in the storm that we are seeing in the West. So this is obviously a culmination of that, and of course, I mean, emerging markets tend to obviously come from a very low base, but given that they can still outperform in an era of tightening central bank moves, that's really noteworthy, I would say. And I mean, I think it's a really important thing that you pointed out today. But yeah, of course, the China story has been a little bit underwhelming so far. We also saw, over the weekend, the PMI numbers, especially on the manufacturing side, were below expectations, dipping into the contraction zone. So there are some pockets of risk. I think the China story, we have to be really aware that it's not going to be even growth across all sectors. Certainly looks like services side is doing better with dining out, restaurant, travel picking up, and we've seen that in the early numbers for the Golden Week spending as well. So I think there are pockets of strength and there are pockets of weakness, and I think the central bank and the authorities in China stand ready to support, to really kind of bring growth to a level that they seem comfortable with.
Now, Charu, the other thing that's come out this morning is, or late this morning rather, is the RBA numbers. The RBA has, Reserve Bank of Australia has hiked up its rates by 25 basis points, despite the stresses in the domestic mortgage market in Australia. What are your thoughts on this? And does this set the tone for some of the other central banks that perhaps are also things like the Bank Negara in Malaysia, who are coming out with their policy decisions later this week?
I mean, I actually fail to understand whether Bank of Japan is the one that gives the most surprises or is it the RBA. But certainly the decision this afternoon from the Reserve Bank of Australia was, against consensus expectations of a pause. So it is a big surprise, given that they already paused at the last meeting. And then the Q1 inflation print that we saw in between was also below the RBA's own forecast. So I actually thought that there was no impetus for them to really turn hawkish at this meeting. But like I said, they continue to surprise. So certainly I think it's a broader indication that inflation remains a problem. It is so sticky, and central banks cannot comfortably pause. I mean, forget about starting to think about cutting rates right now. And I think that will be a trend that we will see more globally in the region as well. Even if the central banks continue to pause, they still have to keep the doors open for further tightening if inflation does not behave.
But Charu, this is against the backdrop of worries around banking sectors. So we obviously had over the weekend JP Morgan Chase takeover of First Republic Bank in the US. Now that's the latest takeover. What does this really mean for the banking sector globally and also for economic risk as well?
So, of course, I mean, I think one more crisis has been averted. While that may be a bit of a soothing factor for the markets because regulators did step in once more, one more weekend gone. But, of course, like you rightly said, the fixes that we are seeing right now are pretty temporary. You've kind of provided a solution for the day, but not for the weeks and the months and the quarters ahead. And there are pockets of risk, no doubt. And we've seen that very broadly in the banking sector, even though this does not appear to be a systemic crisis. We see deposits are moving out of regional banks and going into bigger banks. So there are pockets of risks in the regional banks, and we have to obviously continue to watch that. But like you said, of course, economic risk is something that is also of a lot of importance, even if we don't see any further bank failures. There is a risk that banks will tighten lending standards. Interest rates are also reaching their peak. So obviously the bank's outlook is turning a little bit more bearish at this point. So again, they will have to tighten lending standards to maintain profitabilities. So I think, yeah, what that means for economic growth going forward is that we could see credit conditions tighten, and that does mean that recession concerns could become larger, or they could come sooner than expected as well.
Charu, it's always great to have you on your show. Thank you very much for your insights.
Thank you for inviting me, Brian.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets Singapore on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.